What is up, guys? Welcome back to the channel. Today is July 30th. We are about 1 day away from the monthly candle close. Bitcoin's monthly line chart, which is what is on the screen here. You can see that it's pretty much just been a straight parabola, straight line up since the beginning of 2023. Every dip is just a buy. Take a look at the candle chart, the monthly candles. You can see this is another green month. This will be our fourth green monthly in a row. From 2023 going into 2024, we had 1, 2, 3, 4, 5, 6, 7 green monthlies in a row. And if we go back in time in the last bull market, you can see we had 1, 2, 3, 4, 5, 6, about 6 monthly candles in a row. If you go back to 2019, we had 3, 4, 5 in a row. 2017, we had 1, 2, 3, 4, 5 in a row, red, and then 3 more in a row. So what we're seeing right now is pretty standard in the Bitcoin bull market playbook. I would say that at this point, this is not too many in a row yet. Although what we do have is bearish divergence. Now, on the monthly chart for Bitcoin, we have seen this already. We had slight bearish divergence on this high when we reached 100K or 109,000, but that did not stop the price from getting continuation to 123,000. Bitcoin does have potentially more room to run before reaching the upward sloping resistance point, which is actually sitting around 130,000. And best case scenario would be that Bitcoin's monthly RSI actually closes above this resistance. If we're able to break out above it, then the prices will probably exceed 130,000 on this run, maybe heading up towards 142,500, which is my sort of ideal, most likely price target for the cycle. And that target of 142,500 is not something that I'm recently talking about or recently decided that is my target. This was actually something I posted back in the end of 2023 into 2024. I was discussing this target, 142,500, which is a simple reducing ratio calculation that's showing the average performance from cycle low to cycle high and cycle high to cycle high. If you combine those two, the average is about 142,500. As high as 190,000, but more likely would be 142,500. It's not an opinion thing, it's just math. Also, I'm going to be releasing trading bots soon, and one of the requirements to get access is that you need to be signed up on my BloFin link to get access to the trading bots. So definitely do that now. Trading bots should be released in less than a month. So definitely get prepared, sign up today. It's free to sign up. There's no KYC. It's very easy, very quick. All of your fees, you get 10% back right in your pocket every single day that you're trading. You get 10% cash back on your trading fees. And they also have a really good offer, 3x deposit bonus for my subscribers, my viewers. Now I want to jump over to this chart, which I posted on Twitter. I was talking about the Bitcoin weekly chart and the Bitcoin daily chart, but the Bitcoin weekly is from 2025, the current cycle, and the Bitcoin daily is from 2017. And these two charts are strikingly similar. They have very similar characteristics. It's a really similar playbook between the two. You have a few common waves of enthusiasm on the way up, and you can see there's a similar sort of 1, 2, third wave, and then you have the final run up to a much higher target. I think we're at that stage now where we see a lot of volatility and then a vertical push into a higher target. And at that point, the price would be going fairly vertical, right? I mean, it's going to be almost straight up on linear scale, which is not sustainable. These types of trends are not sustainable, right? And that should be pretty obvious. I mean, parabolas are awesome, but they're not sustainable. So when they break down, the momentum shift is really, really strong to the downside. Now, as of right now, Bitcoin is perfectly positioned well. We have a lot of room in between the price and the parabola. So I'm not worried about that. I'm maintaining a bullish bias here. I think Bitcoin has not finished the cycle yet. The S&P 500, which is one of my main indicators for guidance on market direction, is currently showing the monthly super bullish. I mean, the S&P is going to close out this month probably with a nice bullish candle, a breakout above. This is the first full monthly above the previous all-time high for the S&P. So in my opinion, that run is kind of just started. There could be some chop in following months, but I think we're going to get continuation on the weekly chart. Even if the S&P were to come down towards about 6,100, if it were to bounce off that level, this would be bullish, constructive, no problem there. Same thing for Bitcoin on the weekly. Even if Bitcoin came back to retest, in theory, 110,000, in my book, that's still very bullish, right? Even if it came all the way back, let's say the S&P corrected and Bitcoin came back to 110,000. Ultimately, this is just textbook bull market structure. Over here, previous resistance, new support, and then you have, just like right here, previous resistance, new support. It's textbook bullish, even if Bitcoin came back to 110. It's just another dip to buy. Every single dip since the beginning of 2023 has been a buy. Every bearish thesis has been destroyed since the beginning of 2023. And it's kind of funny. I notice people get really scared on every dip, even to this day. And I've never remembered a bull market ending with people getting scared on every dip. Every bull market in the past that was topping out, everyone would scream, buy the dip, buy the dip, buy the dip on every dip at the top. People are still scared on every dip. So from a psychological standpoint, we don't really seem like we're at a cycle end yet. It seems like we got a lot more upside to go. Let's say Bitcoin follows, my general idea and we run up towards 142,000. Let's say Bitcoin has a big correction after that. And if it's able to sustain higher levels while having already topped, right? Sort of just bouncing at those highs before the true bear market begins. In that type of environment, altcoins can still do well. So it's possible that the altcoins could run into the first or second quarter of 2026 if Bitcoin is sustaining higher levels before it falls off a cliff. As usual, every cycle, Bitcoin eventually has a big tumble down. So I'm not discounting the idea that, things in this market can continue to play out even after Bitcoin has topped. Most people in the market, at least retail, they don't really know that the market top is in when it's in. They find out later when their portfolio is down 50% or more, then they realize that they missed the top. It might look obvious on this chart with the way that I've drawn it out, but if Bitcoin's price rebounds up to the 786 after reaching its target from high to low, if we come back up to the 786 fib after that correction, and we're that close to the all-time high, people are gonna think that the new all-time highs are coming again. They're not gonna wanna sell. They're gonna think it's gonna keep going up. But then we get a lower high and another lower high, and then it sort of slowly bleeds out. In this environment where people don't know that the top is in, altcoins can do really well. So I'm not discounting that idea. There's a lot of sort of curveballs this cycle. There's a lot of mixed signals this cycle. So I am, prepared to expect the unexpected. My mind is open, right? My mind is open in terms of how the altcoin cycle could play out. But for Bitcoin, to me, it looks crystal clear right now. All of August, September, October, and then maybe we'll hang out up here into Q2 of 2026. There's a large distribution pattern going into the second quarter of 2026. That is entirely possible. People will be convinced that the cycle has not ended, and then they'll find out later, like usual. But of course, a lot of this depends on the S&P 500, which roughly follows the halving cycle profit model as well, right? It's not based on the halving. The halving cycle profit model is actually based on the global liquidity cycle more than the halving, right? And what we notice is that 80 weeks after the halving just so happens to be where the global liquidity cycle slows down, markets become choppy, you get a dip, and then you recover into the next US election, markets run up, you get toppy, dip, and then run up into the next US election. It just so happens that the halving is timed up with US elections. And so the global liquidity cycle, usually 80 weeks after the halving or the election, you have a market top. It doesn't necessarily mean that this next top for the S&P is going to look like what it did in 2018 or 2022, right? It could look completely different. It may play out very, very differently, but usually you get very choppy and unstable after that point in time. Right? It's not a price target, it's a time target. And if you look at the M2 global liquidity offset, if we take this over to Bitcoin, again, readjusting this back to 99 days, then you'll see Bitcoin is currently following it. We've been following it for quite a long time. The offset has actually played a really good key role in predicting the price of Bitcoin, the sideways action, the rebounds, the pullbacks, the rebounds. And it's, lining up with October, showing that there's a big drawdown in the global liquidity that is incoming. The money that's coming into the global liquidity index is affecting the market with a 99-day delay, according to how I've analyzed this. So that is another reason why I think Bitcoin is ready to see a vertical move to much higher levels, potentially 142,000, just like 2017 structure. You know, we have the global liquidity index currently on our side suggesting continuation into October. So that's how I see things right now. I think the cycle will continue, and I think altcoins will also begin to run. Obviously, the altcoins have not been the best, right? Not doing so great, but just like all the other cycles, they usually run into that 80th week post-halving zone. And we are coming up on that final stretch, the multi-month stretch where we could see the others chart, the low cap altcoin index, others, could likely run to at least 550 billion, a new high here, or as high as 840 billion, which is the target, the fib target from past cycles, fibbing from high to low. In 2018, you run up to the 1618, that was the target. And considering diminishing returns, if you're using the same analysis, then we'd be looking at the 1272 at 838 billion right there. That would be the target for this cycle for the low cap altcoin index. But I hope you guys enjoyed this video. If you did, smash the like, subscribe to this channel. Be sure to sign up with BloFin. They currently have a great offer here for my subscribers only, and that is a 3x deposit bonus. There's no KYC. It's very easy, very quick. With BloFin, using that link below for 10% cash back on all of your trading fees. I hope you guys enjoyed this video, and I'll see you all in the next one.